Good day, learners. We are on lesson 3. Today's topic is credit sales and debtors. Okay, for further information for you to understand, you can look at your textbooks on page 76 to 79. Let us begin. The definition of credit sales means it refers to transactions that take place when the business allows customers to buy goods and stock on account. This means that the customers receives the goods, they take it home and pay for them later. Example of a credit sale can be when your mom goes to Edgar's and purchase products, they take it home and pay towards the account later on. So let's look at the various concepts that are related to credit sales. Firstly, it is debtors. These are people or businesses who have purchased on credit and still owe the business money. Which means if I have my normal customers coming in to purchase products, but then they realize that they don't have enough cash with them, but they require the products urgently, so they take it today and they will pay me later. Then when they do that, I will provide to them a credit invoice. That is a source document that the debtor receives when he makes a credit purchase. So when the debtor purchases from my business, I will give to him a credit invoice. What remains in the books of mine is a duplicate credit invoice. Okay? And I will definitely record this transaction in a journal called the Debtors Journal. Then, just in case those customers, those debtors of mine are unhappy, I'm going to allow them to return their products to me. So debtors allowances are made when the debtor wants to return the goods and services, goods that he purchased for various reasons. Example, he might be dissatisfied because it has incorrect color, it's an incorrect product, the goods may be damaged, perhaps he is being overcharged, okay? And he wants to return the products to me or a portion thereof to me. So the debtor receives a reduction on his account. Now, when the debtor brings his products to me, it is going to be accompanied with a source document that he sends with the goods that he is returning. And that source document is called a debit note. Okay, so my business is going to receive the products and the debit note, and I will issue to him a credit note. This is a source document received by the debtor from the business after his goods have been returned to the business. Okay, so basically these are credit sales and debtors. So we have 3 financials that we are going to look at. The cash receipts journal. This is used to record monies received by the business. The debtors journal used to record credit sales to the debtors, and the debtors allowances journal used to record returns made by the debtor. Okay, learners? So basically that is what credit sales and debtors is about. Okay? Right. Now I am going to discuss a legislation that was introduced or implemented by our government years ago. The main aim for the government to introduce the National Credit Act, called NCA, was to protect the consumers from high interest rates. Remember our grandparents, our forefathers, when they purchased high valued products before, example, a television set or a lounge set, they did not understand the real kind of transaction they are getting involved with. And they felt that they were going on years and years, and they are still continuously paying that account. Basically, that account went on for years, and that it was never settled quickly. So the government decided, let's introduce the National Credit Act to protect customers like this. Okay, so the main aim or purpose is this act was passed by the government to protect consumers from high interest rates. Okay, so when applying for credit, the consumers have the right to apply for credit without discrimination, which means they cannot be discriminated against in terms of color, age group, gender. Okay, so everyone needs to be given a fair chance when applying for credit. They need to understand what they are signing for on the credit agreement, which means if the customers are unaware or are unable to understand the clauses in the agreement, they can now ask for that clauses or terms to be interpreted in their language so that they have a better understanding. They have a right to receive a copy of the credit agreement that they are going to sign. Why? Because they can take this credit agreement and get back to the business before signing on. If they wish to understand the clauses better, because some clauses may be hidden, they can take it to their attorney or somebody who is able to explain to them better before they sign. Okay? Then they can get help from debt counselors. Who are debt counselors? These people are involved in counseling debtors or people who have purchased on credit and who are finding it difficult to settle their commitment. Okay, let's look at the benefits of the NCA to the customer. You have to know this, it is in your test for June. Okay, firstly, for the customers, the National Credit Act provides for debt counseling and it protects the customers from high interest rates. And the benefits of the NCA for the business, they have a better cash flow, which means they can avoid people who are unable to pay their account. So cash flow becomes easier for them. And of course, reduce bad debts, which means we are avoiding sales to people who are unable to pay their account as well. Okay? Then as we come to the Consumer Protection Act. Okay, this is known as CPA or the National Consumer Protection Act. The main aim here, this act was introduced to protect consumers by giving them certain rights as a result of transactions that were made with the business. Here we are looking at consumers. The idea is to protect consumers more, right? The rights of the consumers are also on page 79 of your textbook. Okay, you also need to know all the rights that consumers will have. These rights are also listed in the Constitution in South Africa. Okay, in our Constitution is a legal binding document that the government has published so that every consumer or every citizen knows their rights. Okay, let's look at the first one. The consumer has a right to safe products, meaning that product cannot create any harm or damage to that person who has purchased it. That product needs to have, or consumers have a right to fair value, which means if they are purchasing a product, it needs to give them fair value. Okay, they cannot pay an exorbitant price for a particular product where they can only use it once or twice. So it needs to be able to be used quite often. Then fair terms and conditions to that product. What does fair terms and condition mean? Right? Fair terms when we're concluding the deal, right? Meaning that product cannot be, there cannot be a very high price attached to it. And the conditions thereof means the consumer has to be given a fair time to settle that cost of it. Then fair and honest dealings. Here is very important. Most entrepreneurs, what they do is they try and motivate or influence customers to come and purchase their products. But when customers go there, they see that that certain product is out of stock. So Consumers, remember, have a right to fair and honest dealing. They cannot be forced to purchase products that they may not want. Fair marketing, yes, products or consumers have a right to fair marketing, meaning that consumers can purchase products in terms of fair marketing processes, right? Consumers have a right to privacy. Yes, if they don't wish to purchase the product, they don't have to be forced to. And if they need to know, if they want to purchase the product and do not wish to disclose the reason for, of course, they don't have to. Okay? Consumers have the right to a choice. They cannot be forced to purchase a product that somebody else wants. They have a freedom of choice. Okay, and where they wish to purchase might also be a choice for them. Right? Consumers have a right to be treated equally with no discrimination, meaning there must be no bias in that transaction when it is made with the consumer. And consumers have the right to have information explained to them in understandable language. That is very, very important. Okay, learners, before they conclude that transaction, consumers must know and understand the transaction. All right, so activity for this section is activity 5.4, which you are going to complete in your notebook. And that activity will be seen in your textbook. When we get back to class, learners, I'll be going through the answers, so please have them ready for me. Thank you.